If you ever ask yourself, can you do a short sale while in foreclosure? You've come to the right place. But the answer may not be what you're expecting. Hi, I'm Dohn Thornton. I'm the short sale guy. I've been doing short sale investing exclusively for almost 20 years now. I've helped well over 1,500 homeowners in my period of time. So I want to explain to you what a foreclosure is in this video, and then I'll explain to you what a short sale is and why a short sale is absolutely the best alternative to anything else out there if you're in foreclosure. So a foreclosure is basically a legal process where the bank is allowed to get its collateral back through a court action, or if it's a non-judicial state, not through a court action. But basically what it means is that if you're, as a homeowner, if you're not paying your mortgage and it's 90 days or later, then the bank has the right to do what they call an acceleration clause, which means they can call the entire amount of the loan due instead of just, allowing you to keep making payments for 30 years or 15 years, whatever term you have on your mortgage. So now, in a judicial state like Florida, where I'm from, or like Pennsylvania, New Jersey, Delaware, Connecticut, Illinois, those kinds of states, the bank has to file a legal paperwork, a lawsuit basically against you, and it has to go through the entire the court process to where a judge will make the determination on when the foreclosure auction will take place. Usually that takes place on the courthouse, at the courthouse steps. Sometimes it's not really at the steps, but in a room in a courthouse. And then 90% of the time, frankly, the banks buy the property back. So that's what a foreclosure is, because I often see some confusion with homeowners and also investors and even real estate agents. They think that somehow a short sale is the same as a foreclosure, or they think that if you have one, you can't have the other. And I hope this will, shed some light on that. So what a short sale is basically, well, before I get into that, I would love for you to go down to the corner here and subscribe to my channel. I put a lot of nice value out there, and I don't think you want to miss every time I get a new video out there. So do me a favor, go down and subscribe. I would appreciate it. Now let's get back into the short sale side of this. So a short sale is where a homeowner owes more than what the property's worth. An example I like to use is, let's say the property is only worth $150,000, but the mortgage amount, the payoff, is 170. So the homeowner cannot sell the property with a full payoff and would be facing financial doom and a foreclosure auction if the banks did not implement a new system about, I don't know, 30, 40 years ago, I suppose, where they will allow a buyer to buy the property for less than a full payoff. Now it's a whole convoluted process, and if you don't know what you're doing, you can really get into a swamp and not have a positive outcome. Luckily, we've been doing it for 20 years and we know how to do them amazingly well. But we'll do that next, and we'll talk about that in another video. But so a short sale is where the buyer is going to try to get out from under the upside down house and get it sold, and then the mortgage company will not pursue legal action to get collections on the amount that was not covered in the sale. So that's what a short sale is. Now, I would love it if you would go down into the comments section of the video and leave me a comment and leave me a question, or give me your opinion. I would love to engage with my followers and people that watch my videos. So that would be amazing if you could do that. Now, I want to talk to you now about why a short sale is the best alternative to a foreclosure auction. And if your question was, can you do a short sale in a foreclosure? Absolutely. In fact, you don't even have to be in foreclosure to do a short sale. You just have to be upside down on your mortgage. And that's something that people don't understand, but it's actually true. So a short sale means that you can recover from your credit damage much more quickly. It only takes you 2 years to qualify for a conventional mortgage after a short sale is closed. You have no closing cost. The bank pays everything, commissions, closing costs. Even if you have an HOA, they'll pay a year's worth of unpaid dues to your HOA. In fact, in between the buyer and the bank, there's nothing out of your pocket as a homeowner. So it's an amazing way to get out from under an upside down house. And if you live in the property, they'll even give you cash for keys. and get you like $3,000 or $5,000 to incentivize you to leave and not cause any problems. So what I want you to do now, if you're a homeowner, I want you to go down to the description of my video, and there's a link. It's called Dohn Buys Houses. Go down there and fill out a form and reach out to me. I would love to talk to you about your situation and how we can help you. I've had an A+ rating with the Better Business Bureau since 2004. Think about that, 1,500 minimum that of homeowners I've helped, and no complaints, A+ rating. It's amazing. And now if you're an investor, or if you're a real estate agent and you would like to joint venture with me and join my network and make money in this kind of investing and in these kinds of listings, by all means, go down to the description. I also have a link there that you can fill out and reach out to me, and we can talk about how we can joint venture and we can all make money by doing really God's work, which is helping people get out from a situation where, it's major damage to their credit if they don't get some help. And we can do, like I said, a very good deed while making nice money as well. And it comes from the bank's at the bank's expense, not the homeowners. So I look forward to have you on my next video. And thanks again for watching.